Drop a comment if you can hear me loud and clear. Can you hear me? Can you hear me? Can you hear me? You're welcome to today's weekly market review and outlook. You're welcome. You're welcome. I hope you and family had a great weekend. Please confirm you can hear me. Also confirm you can see my screen. I'm waiting for your response. Confirm you can hear me. Confirm you can hear me. If you're on Zoom, please mute your mic and they respond. You can hear me. Also confirm you can see my screen. So excited to have you in today's class. Sister Melola, good evening. I believe you can hear me and you can see my screen. Confirm you can see my screen. All right. So let me know what's your plan for the week. Which pair are you considering trading this week? It's in the comment section. By now, you should have decided on which pair you're going to trade this week. I'd like to know that pair in the comment section. All right. Thank you, ma'am. So which pair are you looking at this week? Which pair are you considering trading this week? I would also like to know your bias. Are you bullish on that pair or bearish? I'd like to know in the comment section. You don't have a plan for the week, you have planned to fail. Before you execute any trade, you should have planned the trade. Trading without planning is planning to fail. There has to be a plan. What's your plan for the week? So like I've always advised, before you analyze currency pairs or gold, you should analyze the yen basket and the dollar index. It's very important that you know the strength of the yen and also the strength of the dollar. You need to know the trend of dollar. You also need to know the trend of the yen basket before you look at currency pairs. Also, it's important that you look at the calendar for the week. It is very important. Okay. First is to look at the calendar for the week. Today is 3rd. So I make use of Forex Factory. Today is 3rd, from 3rd to 9th of May. Need to know the day and the time major news, high impact news will be released from the different countries. It's very important, okay? Don't trade without knowing the day and the time this news will be released. So I'm only interested in the high impact news. That's why all you see here is red folder news. Okay, we have minor low impact news. We also have medium impact news. Okay, but what I'm interested in is the high impact news because this is what really provides volatility in the markets. Okay, so tomorrow, Monday, there is no major news from any of the country. Then on Tuesday, Australia, United States, and New Zealand. Those are the countries that we're expecting high impact news from on Tuesday. Australia will be releasing its cash rate, RBA monetary policy statement, and RBA rate statement will be released on Tuesday. Also, Australia will be having the Bank of Australia will be having a press conference. Then by 3 p.m., the United States will be releasing its ISM services PMI and JOLTS job openings. Then on that same Tuesday, New Zealand will be releasing its employment change and unemployment rates. Now, you don't want to trade the dollar pair before ISM services and JOLTS job openings data is released. Trading before the news is a risk. Trading before the news is a risk. So I've always advised that if you want to execute trade before a high impact news, you should be very conservative. Okay, it's not the time for you to go all in or over leverage. No, before any high impact news, you should risk less. Let's say you're risking $50 on a trade before an high impact news. If you see your setup and you insist on executing that setup, don't risk more than $20 or $25 on that trade. So that when the news is released, you still have $25 balance that you can use to execute the next trade if the first one does not work out. If the first one does not work out, okay? So that is how I trade when a high impact news is expected and I see a setup and insist on executing that trade before the news. That's how I manage my risk, okay? And that is what I advise that you do also. Then on Wednesday, there is no major news. On Thursday, there is no major news. This will be the best day and time to trade dollar pairs. So patiently wait for this news to be released on Tuesday for the dollar before you trade it. Wednesday, no major news. Thursday. So on Wednesday will be the right time. After the close of the Tuesday candle, you will definitely find your setup. You will definitely find your setup. But if you execute the trade before the news, they might use your stop loss as liquidity. They might use your stop loss as liquidity. So I would advise that you wait for the news to be released before you take a trade on dollar pair. So tomorrow I might consider trading on GBP USD Monday, Tuesday. Sorry, GBP JPY. Okay, but I'll look at JPY yen basket before I decide on trading on GBP JPY. Then on Friday, okay, this is the first week of the month, so we expect non-farm employment change to be released. That is non-farm payroll, high impact news. Okay, so if you expect to trade on Wednesday, Thursday, you ensure that you close it before high impact news. Okay, that is the non-farm employment change. As we all know, it's a very high impact news. Every investors, retail traders are waiting for this news to be released before they take action. So most times before NFP, price just goes into a range. The market goes into a range before NFP. But if you see your setup, I always insist that you should execute your setup. Execute your setup. Once you see your setup, execute it, irrespective of the news that will be released on that currency. Execute it, set your stop loss, set your take profits. Okay. So on Friday, we have Bank of England governor will be speaking for Great Britain, 1:20 p.m. By 1:30, CAD will be releasing, Canada will be releasing employment change and unemployment rate. And that same Friday, NFP will be released. So please know what you're doing in the markets. Okay, know what you're doing. Wednesday and Thursday will be the best time to trade dollar pairs. Wednesday will be the best day. Then if you execute your trade on Wednesday, on Thursday, you should be considering exiting that trade before NFP. That is just an advice. That's just an advice, okay? So let's look at yen basket and the dollar index. So let's start with the yen basket. So I shared with you guys last week that yen would be bullish. Yeah, shared with you guys that yen would be bullish, that they are most likely going to sweep the liquidity before going bullish. And that was what played out on yen. Okay. So they had this was let's start with the weekly time frame. Let's start with the weekly time. So you can see last week candle closed strongly bullish. It's closed strongly bullish. This tells me that yen is set for buy. This tells me that yen is set for buy. Okay. Now, if you go down to daily, after the close of last week, you can see we had an armor here. This is a bullish reversal pattern. We had an armor here, and after the formation of the armor, a bullish candlestick has formed. A bullish candle has formed, which confirms the change in trend from bearish to bullish. Now, let's go down to daily. Let's see how last Friday candle closed. So this is like an engulfing pattern. You can see this candle engulfed all these candles. Okay. So this was Friday, Thursday, Wednesday. On Tuesday, we had an inverted armor, and I said that I'll be looking for buy opportunity on yen, right? That was on Monday, Tuesday. So Tuesday I took a buy. I took a buy on yen. I sold GBP JPY, and my stop loss was used as liquidity. My stop loss was used as liquidity on GBP JPY. You can see they swept the liquidity. They used my stop loss as liquidity before the market went in that direction, and I lost on that trade. It was painful because immediately they swept my liquidity, my stop loss price just went in that direction. Okay? Just went in that direction. It happens sometimes like this. Yeah, it happens. It happens. So you just have to take that loss and wait for the next opportunity. So I took my loss on GBP JPY last week. My loss on GBP last week. Okay, so it is buy now, but this is not the right time to buy. This is not the right time to buy. This is not the right time to buy. We need to wait for price to reverse back to the discount area. Okay, so if I want to buy GJ or yen this week, I'd love to see it go back to this zone. It should at least tap this zone. Okay, this is where I will be looking for opportunity to buy yen. Okay, it must sweep this liquidity, this low here. It must sweep this low. And I believe after sweeping this low, it will want to come fill this fair value gap. This is where I will be looking for opportunity to buy again this week. So I expect yen to sell, to be bearish, sell to this zone. Yeah, I expect it to sell to this zone. Sell them from this zone, I'll look for buyer opportunity. If you have any question or any pair you want me to analyze, let me know in the comment section. Can you hear me? Drop type yes in the comment section. If you can hear me, type yes in the comment section. You can hear me. Mr. Sam, can you hear me? All right. So for yen, I think guys last week my bias for the yen is bullish. Sorry, for the dollar. Sorry, I said my bias for the dollar is bullish. My bias for the dollar is bullish. We identified this fair value gap. It was last week we identified this fair value gap. A price came to fill this fair value gap. And last week they also came back to test to fill that gap again. Let's see what we had on the daily. You can see what we had last week. Price pulled back. So this is a discount. I think if you go down to a lower time frame, where's the card? Okay, we'll look at USD card in a few minutes. Okay, so you can see price. If you go down to lower time frame, most likely we had a fair value gap on the lower time frame. Also, if you look at what we have here on a daily time frame, you can see we had this fair value gap here. Okay, this gap got filled. So most likely after the formation of this armor, we had a fair value gap at this point. That's why price had to pull back to fill that fair value gap. Let's just confirm. You can see here we had, let's go to lower time. I believe it came to fill the fair value gap. Let's confirm. Okay, so you can see here we had this fair value gap I believe we will still go down to 15 minutes. There's still a fair value gap here. Let's see. So that could be the reason. And see. Can you see that? Can you see how it's respected that fair value gap? You can see. You can see. It had to fill that gap before going bullish. Can you see that? So let's go back to the weekly. So the weekly goes bearish, tapped into that fair value gap. Then you go down to daily. You can see last Friday candle close as an hammer. This indicates that dollar index is set for buy. Okay, so it has created a support. If you go down to 4 hour, it has created a support. You see this support zone. You can see this support zone. And you see support at this point, also support at this point. In as much the market is still trading above the support, you only look for buy. You would only consider selling if there is a breakout from this support. That will be the best time to look for sell. You cannot sell. You cannot sell at a support and see price has tested this level at least 2 times in the past. First time, second time, and this is the third time. So there's a high probability for price to go up from this point. But if price breaks this support, then you want to consider selling. Okay? If you want to sell, you want to wait for price to break out from this support. There should be a breakout. After a breakout, there should be a retest, then you can sell. The retest will be a confirmation that the trend will continue. Okay, it will be a confirmation that that breakout is valid. Okay, so that is it. But as it is right now, we should be looking for buy opportunity on the dollar. Most likely, it will come through this gap, this fair value gap. Okay, so my expectation on the dollar is that on dollar, I would love to see it. You see, it has created a fair value gap, so I would love to see it at least pull back to this. So that's my expectation. Okay, we still want a fair value gap below here. So this fair value gap is created here. I would love to see it pull back into this zone before going bullish. That's my expectation for the dollar. Okay, my bias for the dollar still remains bullish. I am still bullish on the dollar. But I would love to see it first this week before I buy. I would love to see it pull back into this zone before going bullish on the dollar. I hope that is clear. Please give the video a thumbs up. Give it a thumbs up. Give it a thumbs up. And if it's your first time joining the live stream, first I want to appreciate you for joining. And I would appreciate it. You can subscribe to the channel. Subscribe to the channel so that anytime I come on live, you get notified by YouTube. You don't want to miss any of the session. Okay. So that is it for USD or dollar index. If you have any question or any pair you want me to analyze, drop it in the comment section. Drop it in the comment section. Okay, so let's look at GBP USD. So for those of you with the ultimate signal software, since our bias for dollar is bearish, is bullish, you should only take sell signals on GBP USD. All pairs that have GBP USD as the quotes, GBP USD that has dollar as the counter or quote, you should only look for sales opportunity. Yes, you might see opportunity to buy, but the trend, you need to flow with the trend of the market, okay? So we are looking for opportunity to sell GBP USD, Euro USD, Australian dollar USD, NZD USD. So you should look for sell opportunity. You should be more aggressive on sell than buy, okay? If you see a signal for buy, you should risk less, okay? You should risk less on that trade. But when you see a sell opportunity, there's a high probability that that trade will go in that direction. Okay, there's a high probability that that trade will hit TP without much drawdown. Okay, so let's start with the weekly. So you can see on GBP USD also we had the weekly time frame. We had this fair value gap, which could be the reason for the buy. We had a tiny fair value gap here. The weekly, if you go down to daily, you will see a huge gap on the daily time frame. But on the weekly, it's a tiny one. Let's go down to the daily. Let's go down to daily. On the daily, let's see. So you can see the daily. That's the reason price broke out from the weekly fair value gap. You can see the daily fair value gap. You can see the reason for the pullback. Can you see that? Price pulled back into this fair value gap. And after it filled that fair value gap, what pattern do we have there? It's a bearish reversal pattern. That is a shooting star candle. That is a shooting star candle. That is a shooting star candle. So this is our, we call this our supply zone or resistance zone. Okay, so if price breaks out from this zone, then we might look for buy opportunity. Might look for buy opportunity, but as it is right now, we only look for sell opportunity. Sell signals. You go to 4 hour, okay, so this looks like an engulfing pattern on, yeah, on a 4 hour time frame. We see we had this support here. This support was broken. Okay, so we might want to see price retest this support, which has become a resistance. Okay, let's go to 1 hour. Should be a fair value gap on 1 hour time frame. So I would love to see GBP USD pull back into this zone for selling. Okay, I would love to see GBP USD pull back into this zone, which should be equilibrium. Right? This should be like equilibrium. I'd love to see price, pull back into that zone before going bearish on GBP USD. And if I'm selling GBP USD this week, this will be my first target. You can see we had a resistance to support here. So this will be my first target, and this will be my second target. That is my take on GBP USD this week. Any pair you want me to analyze, let me know in the comment section. Let me know in the comment section. Good, okay. I'll analyze good, few minutes. So let's look at Euro USD before we look at USD CAD and gold. Let's Euro USD. Same pattern. The pattern we have on Euro USD will be similar to what we have on GBP USD. Okay, so let's start with the weekly time frame. So we had a volume imbalance here. Okay, we have volume imbalance here on the weekly time frame. If we apply your Fibonacci from this swing high to this swing low, price has pulled back to a premium area, and you can see this fair value gap here on the weekly time frame that got filled. You can see this fair value gap, and you can see the candlestick pattern that has formed after the gap got filled. This is a bearish reversal pattern. This is a spinning top candle. Okay, indicating change in trend. So most likely, GBP Euro USD might get here. Okay, it's might drop to this level. First target, let's go to daily. So you can see the patterns we had here. This is it gave us, after it filled this fair value gap here, after it filled this fair value gap on a daily time frame, you can see the pattern it gave. This is a bearish reversal pattern. It gave us a shooting star, sold, and gave us a fair value gap here. Price had to pull back. Let's confirm. So there's a fair value gap here on a lower time frame. Okay, let's see. Very sure there's a fair value gap on the lower time frame. Okay. So we had this gap here on a lower time, and this is for our, we have this fair value gap here. There was a tiny fair value gap here, and was tapped into at this point, created liquidity. The high of this candle became a level of liquidity, and I believe that's the reason for this buy. They came to sweep the liquidity residing at this previous high. So I think Euro USD is set for sell. Okay, it's set for sell, but I would love to see it pull back. You can see it has also created a new fair value gap. So I'd love to see it pull back to fill this fair value gap before going bearish. I'd love to see it pull back into that fair value gap before going bearish. Okay, GJ. Okay, we'll look at it. Look at it. Okay, GJ. So that's my take on this with my first target. This will be my first target. So I'd love to sell for, love to see price pull back into this zone. First target will be this. Second target, that's my expectation on the dollar, on Euro USD this week. Okay, that is my expectation for Euro USD this week. Like I told you guys, the last session I had, I told you guys I want to focus on Euro USD and GBP USD. Euro USD and GBP. Okay, so USD card. Let's start with the weekly time frame. That is from Mr. Sam. Okay. So weekly, you can see it closed strongly bearish last week. Strongly bearish last week. If you apply a Fibonacci from this swing low to this swing high, you can see price has pulled back to a discount area. Okay. So now price at discount area. The next thing I want to look out for is the candlestick pattern that forms at the discount area. Okay, that is the next thing I look out for. I'm able to identify a bullish reversal pattern at the discount area. I would look for buy. Okay, it will not be reasonable to sell, right? You can't sell USD card. Even if it will do 1,000 pips from the current market price, it will not be reasonable to sell from this point because this is where you should have entered the sell. After it swept the liquidity residing at this high, you should have entered sell after the close of this bearish candle. And with this, if you had entered sell here, set your stop loss here, you would have made close to 1 to 2 risk reward on this trade. 1 to 2. By now, you'll be out of the trade. So most people who sold from this point, most will be exiting their trade. They will be closing their trade. And as more traders close their trade, because they are satisfied with the profit they've made, what will happen? The supply will drop and demand will increase. Supply will drop and demand will increase. And once that happens, what happens to price? Price will go up. Price will go up. Okay, so it's best to look for buy opportunity here. There should be a retracement. This fair value gap it has created here, there's a high probability it might want to come and fill it before it continues selling. So let's go down to daily. The candlestick pattern that formed on the daily will determine if one should go bullish. So let's see. Can we identify a bullish reversal pattern on the daily? Yes, you can see we had an hammer. We had an hammer last Friday. So the low of this hammer is liquidity. It might be used as liquidity because most retail traders that have executed buy after this or before the close of this candle, the impatient traders would have executed buy and their stop losses will be residing at this. So they might want to use that as liquidity before pushing price up. Okay. So let's go down to 4 hour. Should have created a fair value gap. So the 4 hour, you can see we had this resistance here. Price has broken out from that resistance, which confirms that demand is increasing and supply is decreasing. That's what it means. When price breaks out from the resistance, it's an indication that demand is increasing, supply is decreasing. Okay, so you can see here we had this is a spinning candle. Then the next bullish candle to close above it. This is a buy pattern. This is a buy pattern. Okay, so go to 1 hour. So I'd love to see USD card fill this gap. Okay, and if price breaks out from that gap, then I would love to see it through this liquidity before going bullish. If price breaks out from this zone, okay, so I'd love to see USD card pull back into this zone for going bullish. For going bullish. Okay, for going bullish. Price breaks out from this zone, then it's coming for this low. Then I would have to wait for it to sweep this liquidity before I look for buy. So it's either I buy from this point. Now the candlestick pattern that forms after price goes into the zone will determine if I will go bullish. Okay, but if price breaks out from if the candlestick breaks out from this zone, then I'll patiently wait for it to close to suit the liquidity before I'll go bullish. That's my take on USD card. It's a buy for me this week. It's a buy for me this week. I'm not interested in selling. I'm not interested in selling. Because if you look at it now, if I decide to sell from this point, where would I set my stop loss? And see that it's difficult to identify the level to set my stop loss, right? But if I look for buy from this point, I have an obvious level I can use at stop loss. But if I want to sell, the obvious level I can use on stop loss selling is this highs, this highs, this highs, and this highs. I'm sure they will use it as liquidity. This is where I would, and if you calculate the risk and reward, you'll see that the risk reward is very poor. Selling from this point, and you are targeting, this will be your first target or this target. So the risk reward is very poor. So such risk is not, it doesn't make sense to take such risk. Okay, whatever trade you want to take, you want to ensure that at least the risk reward is not less than 1 to 2. Worst is 1 to 1.5. Anything less than that is not a good risk reward. Anything less than that. Some people trade with 1 to 1, but I don't think 1 to 1 can make you. Some people are doing well with 1 to 1, but for you to win with a 1 to 1 risk reward, your strategy needs to be, the winning rate of your strategy needs to be up to at least 80%. Your winning rate must be up to 80% for you to win with 1 to 1 risk reward. That's why I don't like trading with 1 to 1. It has to be 1 to 2. Potential reward on that trade should be 1 to 2. If it's less than that, it does not make sense. Okay, so that's my take on USD card. Which other pair? GBP, JPY. GBP, JPY. So my bias for yen is buy. My bias for yen is buy. Then I should be looking for opportunity to buy, to sell, right? Yeah, to sell. Okay. So let me start with the weekly time frame. Yes, yeah. So you can see last week candle closed strongly bearish. They swept the liquidity that was residing at these highs. The previous week high also, they swept the liquidity before going bearish. You know, we had an hammer here. The normal suited traders that executed sell after the formation of the shooting star, right? So what they did last week was to sweep that liquidity before going bearish. Before going bearish. That was what they did last week. Before going bearish. They swept the liquidity residing at the high of that shooting star. Okay, so after sweeping the liquidity, look at the pattern we have here. This is like an engulfing candle. Yeah, it's engulfed, broke out from this support storm resistance. Now you can see it broke out. So you can see there was an attempt to retest this broken support storm resistance. There was an attempt to test that area. So I'll still love to see it buy. I want to see a reversal. I know most retail traders that have executed buy and their stop losses is at this level. So I would love to see them sweep this high. This is a level of liquidity. They have stop losses here. They have stop losses here. I would love them to sweep this liquidity here. And since we have a fair value gap above this liquidity areas, there's a high probability they might want to come and fill this fair value gap. At least I would love to see them fill 50% of this fair value gap, which would be around this area. I want price to tap into this area before I will look for sell. If I will look for sell on. If I'm selling, this should be my first target for GBP, JPY. That would be my first target for JP. I hope that is clear. That would be my take on GBP, JPY. I will look for sell, but need to ensure that this liquidity is swept. All the stop losses deciding at the side swept before going bearish on GBP, JPY. Okay. Which other pair? Someone dropped on GJ. They will look at GJ. Good. Okay, we'll look at gold in a few minutes. If there's any other pair you want me to analyze, let me know. We'll end the class in a few minutes. If you have any question, if you have any challenge you'd like to share with us, any question, let us know in the comment section. Let us know. If you have any challenge you're going through, let us know. Let us know. Good. Good. Good, 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 good. Long term gold is still bullish. Okay. Long term, I believe gold is still bullish. Long term, I believe gold is still bullish. Let's see. This is the weekly time frame. Okay, let me start with the monthly time frame. Just enter the new month just started. So let's see. So we can see the pattern we have on the monthly time frame here. It's a bearish pattern, right? Last 2 months ago, it's strongly bearish. Last month too closed bearish. So what we have here is still looks bearish, but let's see the weekly. Okay. So we had this gap here. Price pulled back into this gap last week. We didn't fill it completely. There was a strong rejection from that. Okay. We apply a Fibonacci from this swing low to this swing high. Price has already pulled back to a distance area. That was the reason for this buy. Price has pulled back into this gap. Let's go down to daily. The pattern on gold is not just clear. The pattern on gold is not clear. It's not clear. Let me see for see that gold has been in a range for some time. Pattern is not clear. Okay. Pattern is not clear. I'm neither bullish nor bearish on gold. What I'm seeing on this chart. I'm neither bullish nor bearish. Okay. I'm neither bullish nor bearish. Or if I want to risk trading gold, gold created a resistance after the close of last Friday candle. We had this resistance. If I want to buy gold, I would love to see it break out from this zone. If I want to risk buying gold. Okay. If I want to risk buying gold, 4-hour candle must close above this zone. 4-hour candle must close above that zone. Okay. I want to risk buying gold. So as it is right now, what I have here on the 4-hour time frame, it's a sell setup. This is a sell setup. I think we had a fair value gap here. Okay, that gap has not been filled completely. You can see this fair value gap. Price has pulled back into that fair value gap. It has not filled it completely. Then I want to use this high as liquidity before going bearish. Okay, so if I'm going to sell, this what I have here on 4-hour is sell. Okay, this is a sell setup on the 4-hour time frame. But I would love to see them sweep this buy side liquidity or wait for price to pull back. You see this fair value gap here. Okay, so before going bearish. So you can see on 1-hour time frame, we have this fair value gap. I don't think this gap has been filled completely. So the sell side liquidity is residing at this low, while the buy side liquidity is residing at this high. So if I'm going to sell, my first target would be this sell side liquidity. Okay, and I believe we still have sell side liquidity residing at this low. So if I'm going to sell, this will be my target. This will be the first target. This will be my second target, and my stop loss will be buy side liquidity, which is residing at this previous high. That is my take on gold. Okay, that's my take on gold. If I'm going to sell, I'm going to sell. My first target to be here, second target to be here. If I'm going to buy, if there's a breakout, 4-hour candle breaks out from this resistance, I'm going to look for opportunity to buy. That's my take on gold. The trend, the pattern on gold is not clear. Buying or selling gold is like a gamble as far as I'm concerned right now. It's like a gamble. It's a gamble. Trend is not, it's not just, it's not clear. It's not clear. Every day is not a trading day. Every week is not a trading week. So what I'm saying here, gold is not set for buy or sell, right? It's not, that's what I'm saying. Okay, but if you want to gamble it, buy above resistance, sell from the current market price to this sell-side liquidity. It's a gamble. It's a gamble. Any question? Any question? I think that will be all for today's class. Do you have any question? Do you have any question? For those of you on Zoom, you can unmute your mic if you have any question. If you have any question, or if you're on Zoom, you can unmute your mic and ask your question. Any question? Is there any other pair I want me to analyze? So our next class most likely will be on Tuesday, 10 a.m. Any question? Mr. Sam, do you have any question? Mr. Gani, do you have any question?
Yeah, no question.
Well, no.
All right, thank you. Thank you.
Thank you so much.
Mr. Chimeze. All right, sir. Thank you, sir. Mrs. Damilola, do you have any question? Do you have any question? All right, so no questions. I want to appreciate every one of you for your participation, Mr. Gani, Mr. Sam, Mrs. Damilola, Mr. Chimeze. Those are the people I can see their comments and see their names. YouTube and also thank you for your participation. And I wish you all a profitable trading week. Do have a wonderful night.